Good afternoon. This is Brian Shannon from Alpha Trends Blogspot. It's Tuesday, December 26, 2006. Hope everybody enjoyed their day off and back to business here today at a slower pace. Obviously, you look at this volume here on the S&P 500 spiders, much lower than it has been over the last probably few months or so. I'm not going to do a volume analysis here, but we did get a little bit of reprieve from the recent selling, and that occurred right as the market found support once again at its uptrend line that's been intact now for close to 6 months actually. The S&P 500, the spiders, were up 82 cents today and did find support at the level that we've been kind of expecting them to, which is the prior resistance, which we expected or hoped for to become support, as well as that trend line as well. Further below, we have that advancing 50-day moving average, and that's what keeps me generally bullish. Doesn't mean I think that everything's a buy right here, but generally the path of least resistance does remain higher, and you should keep your eye open to opportunities on the upside, particularly with the seasonal strength here towards the end of the year. Looking at a 30-minute time frame, though, we can see here that we've got a declining 5-day moving average, and that tells me to keep my intermediate term look at the S&P 500 as still not quite trusting yet. It's still guilty till proven innocent on this time frame. So we did see some buying, but it came on light volume. We do have an area that's been important in the past near this 142 level. This has been contended numerous times as resistance and support. So I think that continues to be the area of more important resistance. I do think that this 5-day moving average will be important as well. So maybe a little bit further backing and filling before the market can really sustain any buying pressure here. So I think the proper way to look at this market is to continue to go slow. The Qs, the Nasdaq 100, obviously they broke their uptrend line. That's not news. We had that occur, couple weeks back, and we also had the break of the 50-day moving average, which has a lot of people nervous. But again, I'll point to the fact that the direction of the 50-day moving average is rising. With the indecision coming from the moving averages, though, it tells us we still want to be very cautious in here. I still continue to believe that there's a possibility that we'll get a bounce in here, and what we're going to have to see first happen is this prior level of resistance that or support rather, that we're watching so closely at 43.30. That's going to be the most important short-term level that this market's going to have to get above before I can be convinced that it's time to do some more significant buying in here. We've also got the declining 5-day moving average. And while the spiders had a good day today, these Qs were only up 18 cents, and it traded in a much narrower range. Percentage-wise, I guess they were up 0.42% versus the spiders 0.55%. So they were actually pretty evenly matched, though. But so we're going to have to see this 43.30 level taken out as support. And now I would say the recent lows are 42.90 are the more important level of support for this market. The strength today, the bigger strength came from the mid-caps. The mid-caps were up 0.85%. They gained $1.23 here looking at the MDY. And you can see that that came right at that rising 50-day moving average. And we'd also seen a nice divergence trade set up here on the MACD, meaning that the MACD made a higher low while the market made a lower low, often an indication that a potential change in trend is nearby, meaning that the sellers have kind of exhausted themselves and the supply isn't as strong coming into the market on this particular low versus the one we saw the prior week. So in here we've got this 5-day moving average flattening out. We've got all these moving averages crisscrossing, so this is much more encouraging. Not only just based on the percentage move today, but technically the way it's setting up in here, it looks as though the buyers are starting to find, or rather gain the upper hand in here. You could make a case for an inverted head and shoulders here. I'm not going to pay too much attention to that. I think we need to see the market get above and stay above probably about 147.15 or so. That will make me a little bit more confident about the upside in here. But I think you continue to take it somewhat slow in here and continue to focus on the individual trade setups. The semiconductors did bounce a little bit as well. They were up 22 cents. That gave them a 0.66% gain based on looking at the SMH. I'm not going to belabor an analysis in here, but 32.75 is the more important level of support. We've got the 10-day moving average below the 20, below the 50. They're all declining. We've had recent lower highs and lower lows. So this market is really guilty till it's actually more neutral than anything, as I've been saying for the last month or so, but it's starting to look a lot weaker based on where it is in relation to the moving averages and the direction of those moving averages. So be careful with the semiconductor stocks. The only positions that we had open were, first of all, dynamic materials, symbol boom. And as you know, I've been bearish on this stock for months now, it seems like, and it just can't seem to get that big crack lower that we've been looking for. However, this did make for a nice profitable trade. We shorted at 28.50, lowered our stop down to 28.05, hoping that giving it a little bit of room would keep us in, but we did get stopped out of that one today. So stopped out with a gain of 45 cents. And the only other open position we had was this Teva Pharmaceuticals, TEVA. There's the daily time frame. Now looking at a 10-minute time frame for Teva, you can see that we had gotten involved at $31.50 on this day right here. And then we had lowered our stop. Only once, because it really hadn't done much, but we got stopped out today at 31.63 with a loss of about 13 cents. The only stocks that I'm going to really be looking at, except for a case-by-case basis, but I'm going to be focusing primarily on those January effect stocks that I've been alluding to. And, you know, this is my opportunity, the way I see it, to get a year-end bonus. If you're interested in participating in these, the only way you're going to get the names of the stocks, one of the ones that I told people I was buying last week, this one I bought at $4.15, had a nice day today. So I don't believe that January effect is as simple as buying on the last day of December. I think that's a foolish way. I got involved right here, and so far the stock's showing a nice little move higher. But if you're interested in getting access to those stocks, and what I've been doing is emailing people when I get involved in the stock and updating the stops as necessary. So go ahead and send in a PayPal contribution if you're interested in that. Otherwise, you're going to be on your own for stocks, and thanks for listening.